Ethereum isn't used anymore, at least in the way it used to be used. Ethereum isn't anymore this hub for DeFi, the smart contract platform that people use to deposit their funds and get interest on it. The total value locked of Ethereum is rather declining over time. Now in this video we are going to look at a lot of on-chain data. We are going to look at charts, how the number of transactions is developing, how the number of holders that hold a certain dollar amount is developing over time. We are also going to look at Ethereum's inflation or lack thereof, the burning mechanism. How consistent is Ethereum actually being burned? A lot of different charts that are of immense value if you are heavy in Ethereum. And so let's start off with the net ETH emissions after EIP 1559. So this is the introduction of the burning mechanism for Ethereum. And that's the reason why Ethereum is also called the ultrasound money. Not just the sound money that doesn't inflate, but ultrasound as in its supply is decreasing. So currently annualized that's at 0.082% per year. That's the decrease in the Ethereum supply. Had we not introduced EIP 1559 and had we still been at Ethereum proof of work, so nothing changed, then the Ethereum supply during the same period would have increased by 3.4%. And so we can see the burn by this line here being below zero. So here's the zero line. We used to have positive inflation in the past. Now we tend to have negative inflation or burning, and this increases with the usage of Ethereum. Quite a large spike during the meme coin frenzy, right? When Pepe, etc. was rallying. Now this has normalized somewhat again. So how are the transactions on the Ethereum network developing? This is a 7-day moving average, a chart starting in 2015. The number of transactions went pretty high during the bull run. So this is when Ethereum peaked at 1400 roughly. Right, then subsequently it went down by 94%. This is when the transactions went from 1.25 million down to roughly 400,000. So the number of transactions didn't go down as much as the price did. Then we had a gradual increase and now we're going pretty much sideways, similar to the activity levels of 2018. Right, see how the current number of transactions is very similar to that 2018 peak. The price did slightly rise, 40%. The transactions went slightly down compared to that peak. So it's interesting, right? It doesn't take as many transactions to achieve a higher price. This is the number of active addresses on Ethereum, again a 7-day moving average. So here's the title of that chart. And this also went down. It went down more than the number of transactions. So in other words, the people that still hang around, they tend to do more transactions. And they also tend to hold Ethereum for longer because otherwise, why would the price now be higher? Why would it rise when the number of transactions is down, when the number of active wallets is down? So the people that are currently involved on-chain with Ethereum are stronger believers. They transact more, they hold more than what we have seen at the end of 2018 at the hype stage. That's how I interpret this delta. Now this is Ethereum's on-chain value measured this time in US dollars. So this goes up and down way more because now we've got two effects that are multiplied with one another. On the one hand, we've got the price increasing. On the other hand, we've got the number of transactions increasing. We multiply those two, which then means when both go down at the same time, which is what happened, right? Then we see a real crash in terms of how many US dollars are actually being processed. Now the current lows with comparatively little excitement are still much higher than what we've seen in 2019 and 2020. So even though less addresses are active, those addresses are moving quite a bit of capital. And that's probably because Ethereum is still pretty expensive to interact with. And now there are alternatives that are way cheaper. There's Arbitrum, there's Optimism, there's the Binance Smart Chain, Polygon Matic. All of those chains are EVM compatible. All of those chains can run the exact same code that Ethereum can, but for a fraction of the gas cost. So if you're just handling with a few $100, you don't want to be using Ethereum because you pay it all in fees. You then go to those cheaper chains. And that leaves Ethereum with the high rollers, so to speak, with the people that transact thousands of dollars every time. And so here are the fees. Look at how little they actually spiked during the bull run of 2018. Right? The Ethereum price wasn't that far off from today. Attention was at a massive high during those times. But the transaction fees in terms of US dollars weren't that bad. They really just started to get bad in 2021, 2022. And that's when more complex contracts got used. So during 2018, we mainly just had swapping on Uniswap. In 2021 and 2022, we had a lot of DeFi going on. We had a lot of MEV trading going on. And that bidding war for extracting values in the mempool, it pushed up the prices. And the upgrade to proof of stake didn't really change this. So it's very much possible that we see again in the future those $40, $50 transactions. That kind of a fee spike happened with way less attention compared to that kind of a fee spike. So Ethereum definitely still has its bottleneck problem. And it doesn't look like there's a lot of effort to change this. It looks like Ethereum is going through a transition as well, similar to Bitcoin. Bitcoin was intended to be the peer-to-peer cash of the internet and then moved actually to an investing asset, to an asset that protects against government overreach and against inflation. 70% of Bitcoin haven't moved in the last year. And it looks like we can see something similar in Ethereum. Ethereum as a transaction layer seems to become less important. Less and less people transact with it, but the price tends to go up relative to its adoption. So the adoption stays stable, the price increases. That's because of burning, but also because of long-term holding. Ethereum becomes more of an asset than a tool for paying gas fees. The smart contract part of Ethereum isn't that important anymore. And so let's look at this investment aspect. How many wallets are there that hold at least $1,000 worth of ETH, $10,000 worth of ETH, $100,000, 1 million, and 10 million? Let's have a look at those charts. When we look at the number of addresses with $1,000, this pretty much 4x'd from one peak to the other, right? From 1 million to 4 million. When we go to 10,000, this only 3x'd from 250k to 750k. For $100,000 worth of ETH, this moved from 50k to 150, so a 3x. For 1 million, it's 10,000 wallets, and it moved to maybe 22,000 wallets, so a 2.2x. And here we've got roughly a doubling, maybe a bit less, for the wallets worth 10 million. So what does this mean? It looks like the growth among the smaller wallets is stronger than the growth among the larger wallets. So either the people that have larger wallets are splitting it up into several wallets, or, and that's what I think is more likely, Ethereum gets spread across a broader base. So there's more holders, the number of holders is increasing, and they get smaller and smaller over time. And they simply just hold Ethereum. They don't really use it to transact on the blockchain. That's in general a healthy development, right? We want more decentralization. But I think it's still important that Ethereum doesn't become irrelevant as a smart contract platform, that it's actually being used for DeFi. But for that to happen, the bottleneck on Ethereum needs to be removed. The transaction fees shouldn't spike that much anymore. Otherwise, all the action will happen on the layer 2s. And this seems to be, in the end, even the grand plan of Vitalik. He says, retail is likely going to continue to use layer 2s. Ethereum is just going to be the final settlement layer. And we can already see this in the data today. Feel free to join us on Telegram. If you've got the app, simply search for Bitcoin Strategy Channel within Telegram. Alternatively, click the link down below. I hang around there regularly. Looking forward to chatting with you. Bye-bye.